Hello friends, good week. How are you today? Vladimir here, and this is the weekly review for 10th of September 2012. What a week we have had on the previous week. It all happened when Draghi decided that the ECB is going for bond purchases of countries that will need it. Of course, the main of them are Italy and Spain, and that just pushed the markets up. I do think that the market reacted way overrated, but that's the reality. That's what we have, and that's probably here to stay. I'm doubtful for a long run that it's going to succeed, but because it did not ever succeed before, also not on the last time he did it. Now he said it's going to be unlimited. Will that help? Only time will tell. And now I think that the market will be concentrating on Bernanke. If Bernanke comes also with QE number 3, and now it seems that he has all the reasons for that after the non-farm payrolls, which we got 96,000 instead of more than 120,000 expected new jobs in the market. He has now all the reasons to come with QE number 3. Is that like that? I'm not sure. I am really not sure about that. I'm not convinced that Bernanke will do anything. Despite the job market still provides positive results, well, there are some disagreements about the number, but still positive, and the company is still doing okay. I don't think there is a reason for Q number 3, but surprises happened in history. Surprises could happen again, of course. How is it going to affect on us? Well, we have to pay attention for this week, and this week I just want to remind you, this weekend it's going to be the Eurogroup meeting, and Germany still has to vote about all the purchases, and Bernanke on Thursday, is going to hold FOMC statement meeting again, and of course the economic projections, and it's going to be another important fundamental week with the words from Draghi pushed the markets up. Now it's time to see what Bernanke will do. So what can we do? We can go for the charts and look for our opportunities. Let's take a look on probably the most interesting pair for these days, the current period, and that's of course the euro dollar. I said not once that I think that the euro dollar has to push higher in order to go and make very strong sell. If we analyze this bullish divergence, then the real important level we have to pay attention to, that was resistance number 1, right? As we treat that would become resistance number 2, and this one, the very powerful area, is resistance number 3. Now this is a range because it begins here and goes all the way for the gap close. You see there was a gap here, I want to show you, that never was closed yet here. This gap is around 131. Could the euro dollar keep going that strong? Yes. Would it do it? Well, probably yes. Now pay attention to this line. Right? This line has to be retested, but before it does it, there is another line that has to be retested, and this one, which is around the current level, a little bit lower, maybe 1.850. The euro dollar is reaching very extreme point, but based on the lines and the resistances. But what is really important for me as a divergence and convergence trader, that the euro dollar most likely will go and somewhere here or right here or a little bit higher will go and create a weekly bullish weekly bearish hidden divergence. It could be right here around the 128. It could be a little bit higher around the 130, 131. But the picture becomes clear now. We are coming for extreme. Now the weekly chart ended as a Marubozu, as we can see. Right? Here we go. Daily chart ended as a Marubozu, which means the euro dollar should try to push down. Right? First of all, for a small correction before a continuation. My bet, the euro dollar will try to correct something like 60, maybe 80 points. That's my opinion. And then, most likely, if this level will hold, then it will try to go and push higher. Now, what should we pay attention to? RSI. RSI could go and reach the extreme. Extreme means above 80. Combined with a bearish pressure from weekly chart and the resistance range we have here and a 200 moving average, which meets us right here, that could be a correction down for the 123.40 area approximately. So as I said, 60 to 80 points down is definitely something the euro dollar could make as a first step. But for longer run, I think the euro dollar is going to create somewhere here the next divergence, the next extreme area, and from there my expectations for the euro dollar to begin the next strong down move. That's what I expect to happen. So just for a summary, I would go and look for short term, like the 4-hour chart and 1-hour chart correction, and you can pay attention that there is a line started here that could go and be tested. Maybe it's going to be a little bit flat, but definitely there is a room to go, maybe like this, maybe like this. Okay, there is a room to go, and then we might go and see new highs for the euro dollar. But as I said not once, it's coming and creating the very, very, very extreme, and we are getting ready for a powerful, strong retrace. When, how, why, no idea. That's what the chart shows, and it's only a question of time. The next pair to pay attention to is the pound dollar. Pound dollar has a long bearish pressure. The only problem that this pair has weekly sideways moves. I do think the pound is in front of a correction, but I'm not convinced about this pair. There is a resistance right here, there is one little bit higher, and there is one of this high. Each of these levels could be the area where the pound dollar will start its correction back to the trend line. Each of these areas. I would prefer for the pound dollar to go and to wait until the daily chart creates a bearish candle pattern on one of these levels, and MACD changes the slope of the histogram to bearish. Then I will be convinced that the bulls begin to get out. As long as it does not happen, I'm quite not convinced about this pair. The next very interesting pair to pay attention to is the dollar Canadian. Why? Well, first of all, it looks like we have a band-to-band move on the weekly chart. Could it push higher? Of course it could. And it's even welcome, because the daily chart is going to create something very, very powerful. Now, what could happen here? We might have and see a false break below this low and up move here, close above and divergence, turn around of the slope and push up. But in my opinion, first of all, it will try to push lower. The lower levels we have is around 0.9740, then it's around 0.95, right? But dollar Canadian is going to reach very low, and this divergence, the whole line, and the current line, of course, that will be created somewhere, is going to create a wonderful low, and this pair will make the retrace. Stay out as for now, with the same situation as the pound dollar. Once the MACD change the direction, change the slope up for bullish, that would be with a bullish candle pattern, that would be a wonderful sign that the bears begin to get out. As long as it does not happen, stay out. If you hold any buy, don't take another buy. Hold, wait, time will come. Wonderful. The next very interesting pair, of course, well, and we need to discuss about it, is the Euro franc. Euro franc is clearly overrated right here. Why is it overrated? Because it's all about speculations. The speculations is talking about 122 is the minimum level that the Swiss central bank will try to go for. But it's all about rumors as for now. Could it be and turn to reality? Well, yes, it could, but let's first of all get a good basis for that. If it will turn to be a reality, not just words, then definitely the pair could go and push to above the 122, maybe even higher. So pay attention. Once it becomes official, then the Euro franc could make the push and go higher. The next very interesting pair we have here is the Euro against the Australian. From my point of view, the pair is reaching the high. I said it on the previous week as well. This high could be on the current level, around 124, 125, closer to the 200 moving average, or even higher, somewhere around 126. But with the current continuing divergence started and RSI around the extreme, every up move is only in matter to go and create the stronger correction. As I said, I do think that it will go and correct straight to the 20 MA. The question is what's going to happen here from, or 124 or 126. The down move is going to happen very powerful, at least to the 20 MA, maybe even much more. But first of all, let's have a clear picture of well, the bearish beginning. How it's going to happen with continuing divergence on the extreme combined with RSI divergence on the extreme. That would be perfect sign, exactly as it used to be, as it was here on the RSI for a bullish move. By the way, based on the resistance number 3, that was the first area, right? That was the second. The current one is the third resistance, very strong. This would be the fourth. So that's why I'm convinced we're coming to very extreme, and a strong move is about to, a strong down correction is about to begin. The same, by the way, with the Aussie against the pound against the Aussie. I do think the pair could go and make some retrace up, but based on the bearish, well, kind of bearish convergence we have here, every up move should be pushing down, and I still think that this line will be tested. It was never tested before. I think it will be. That's why I think every push up for the pound Aussie should be considered as a sell opportunity with a final target right here on this line. That's my opinion for the pound Aussie as well. Another very interesting pair to pay attention to. Now, a few words about the gold. I was bullish and I keep my bullish opinion, but it's time to get ready to close the buys and try to enjoy the correction. Now pay attention. We have on gold very powerful bearish Gartley. This Gartley could turn to be a bat or a butterfly above. The gold is coming to very extreme. How should we join? RSI, pay attention to the RSI. RSI with a candle pattern, and well, it will be wonderful if MACD will create a new high, higher than all these highs here around, right? If it could make it, that could become a perfect sell area for the gold. and the gold is going for correction. Now, if it pushes for a few days more, like a week more, we will get 20 candles ride on the Bollinger Bands, which means then we will get much stronger correction for the opposite side of the Bollingers. Therefore, I am convinced that the gold is reaching its top, and its top could be right here around 1740, little bit higher 1750, or even higher around 1780. Each of these levels is very logical for a high. Hold on. Once MACD creates a new high, RSI creates a high, and we get a bearish candle pattern. Once it happens, that's the okay to go. And I would say investor style in this case would be preferred way to attack. Now, another very interesting situation is about the oil. I think the oil should break up and take us to the desired level, to this trend line. At least it might go and take us even higher. I think it's going to take us to 100 level, maybe even higher, just to follow this next powerful area for a divergence. It could be 100, it could be 103, or even 105. But this divergence, we can see the power of that. That's why I think the oil is going to push up and then retrace the whole way down. Remember what we discussed about. That's elections year. I think that the government then in US will do all they can just to push the prices as low as possible. And that would be really high for them. Now, in short, about the indices. Indices creating a new high. That's very clear. But we are on a bearish pressure and no one can change it. This bearish pressure is only question of time until it takes effect. Of course, it's relevant for Dow, it's relevant for S&P, for Nasdaq, and for everything you can think about. Even the DAX, right? Even the DAX. We are under very strong bearish pressure, and we can see that on monthly chart as well. All right? Pay attention. That's monthly chart. Hold on, that's the S&P. You see that? Very bearish pressure. Now I don't say it could not push higher. Yes, it could. Of course it could. But I said not once, and I will just repeat. From my point of view, something is going to happen in between the middle of September to middle of October. Something will lighten this event, and I don't know what, but based on charts and based on the cycles, which you can see, the cycle I'm talking about, for example, on the Nasdaq, right? That's right here, somewhere in the middle, right, of September to middle of October. That's the high that could be created with the divergence we have, with the bearish pressure we have, and something big is going to happen. There will be a big bearish event. Should we go and sell all we have now? No need. It's very positive environment right now with all the Draghi's words, and probably we will be after Bernanke. No need to go and fight it. We just need to accept it. But I really don't think that to buy is a good opinion, good idea, because with such a strong bearish pressure, it's only a question of time until something huge will happen. Right? That's why I think it's better to sit aside, not to buy. We remember what happened on buying the tops against divergences. We never know when exactly the very strong event happens. We don't know what it would be, and that's why I say it's very risky to go against such divergences. It's better to stay aside than to go against. And it's just about timing the perfect sell for the indices, and with patience we will see It's all will be decided probably on the weekly chart. So far, we have to hold. Now, a few words about the euro against the British pound. It seems that the pair has a bullish environment, and with a bullish divergence we have, I would not be surprised even if we go 1, 2, and believe it or not, 3. I will not be surprised if it will go and push all the way to 0.84 at the end. But at the end, as I said, the euro is going most likely to find a natural rate because it's clearly overvalued against many pairs right now, and there is also potential bearish hidden divergence to be created on the weekly chart. Probably not in 1 week, probably it will take more. So far nothing new on the euro against the pound, just the fact it broke through the resistance and the Bollinger Band. It will probably go and retest this resistance, which now is support. It's around 0.7960, 50, and then it could go and continue higher all the way to the 200 moving average, and that's probably the thing to pay attention to. Euro pound has a room to go, and as long as it will hold this 0.7950, that could be a good idea to go and try to find buy opportunities, right? And that's what we have actually for this week. Many things, many opportunities. As I said, the middle of September, it's time to be in the market. Do not hesitate. It's better to lose some attempts to catch the retraces instead of missing them. And that's why I say again, for many pairs, we're coming for an extreme. And another last thing for now, pay attention for the US dollar index. That's the weekly chart. We might have a band to band here, which will reach a support around 78, or we could bond and push the last down move to the trend line, the weekly trend line. And pay attention, it's going to be a bullish hidden divergence. Combined with a daily chart, that's the daily chart, RSI is going for oversold. On support area, on close to trend line, and there is a trend line right here, of course, as well. Okay, coming to very, very, very supportive area, and with the MACD bullish pressure and RSI for coming for extreme, the US dollar is getting ready for retrace. Is that for long? As I showed you, based on weekly, it could push a little bit lower even, right? A little bit lower even, but it's going to build a bottom within the next weeks. And that's why I say, and that's my opinion, somewhere in the middle of September to middle of October, some big event is going to happen. Maybe it will come from Europe, maybe it will come from US again. Let's see, only time will tell. That's my opinion, and that's what the charts tell me. That's all for this week, friends. I wish you good trading, good week, good opportunities, good moves, and I'll see you on the live trading room, of course. And have a wonderful week. Good luck. Yours, Vladimir.